All right. We're 3 weeks away from Christmas. The weather's starting to get cold. The real estate market's heating up. We've got a Bank of Canada rate announcement next week. We can all anticipate what's going to happen there. I'm Vaughan Zawadzki. This is my pal Sean Humphries, and we're mortgage people. Sean, good to see you.
Thank you, Vaughn. Good to see you as well.
It's good to be
3 weeks
here.
till Christmas.
3 weeks. Yeah.
Jeez.
Time flies. And, I think it'll be nice to see the end of this year. You remember all that excitement going into 2020? Everybody was so jacked about, like, it's going to be my year. Like, wow, we were overwhelmed with some strangeness. And, we probably have some strangeness to go, or we're still recovering from it. But I think that the more time and distance we put between that event and today, the better. So I think everybody's probably looking forward to 2025. Maybe we're over the hump. Certainly, things are trending in the right direction. It's been way, way slower of a grind than I had anticipated, but we're getting there.
Yeah. You know what? 2020 was somebody's year. Everybody was excited about it, but somebody had the best year of their life in 2020. And I think
Who do you
that's
think that
all
would have
just
been?
I don't know. I think that somebody met somebody, or somebody started a new business, or somebody did something unexpected as a result of what everyone went through, and it changed their life for the better. Obviously, many people went through one of the worst years of their life, but I think it's all how you approach it, that mental toughness or mental approach to something new and something change. Some people just thrive and change better than other people.
It's true. I mean, some people, like, even on the financial side, there are a lot of people that did well by eliminating their commute, eliminating their $25, crappy lunches that they had to buy when they're at the office. So I think some people came out a lot better. And certainly our industry, the real estate and mortgage industry, it came out really slow. But once it started to pick up, and interest rates were under 2%, it lit the whole thing on fire. So, I mean, I had a couple good years, to be honest.
Sure.
But faced with that, we thought it was going to be fireworks, and it was like an implosion. In March, halfway through March came around, and it was like, we have to shut everything down and stay at home for the next 2 years. Not exactly what we had anticipated.
Not what we had planned, for sure.
We have been saying on this show since we started, and just even in our private conversations, that when it comes to mortgage renewals, we never really had anything to worry about. The headlines were saying the opposite. And now TD Bank says Canada retreats from the edge of the mortgage renewal cliff. What do you think about this?
I think that's nice. I think that yes, we are probably not in the same situation that people thought we were going to be in, or economists maybe thought we were going to be in a year ago, where interest rates were high, like fixed rates were almost 2% higher. The Bank of Canada hadn't started decreasing the rates. They've come down 1.25% on variable rates. So I think, yes, we have retreated back from the cliff. I don't think it was probably ever going to get to the point where the entire market was going to implode. We were always going to have rates decrease, but yeah, we've backed away from it. I don't agree on everything that they said in the article, but what's your take on it?
I think it's when it was at its worst and people were worried the most, interest rates were still only, maximum for a 5-year fix was like 6%, right? And so everybody had already qualified years ago at 5.25%. We built that in, and I'll be the first to admit, I've complained about the stress test for a long time, especially B20, when it came out that if you had the 20% down payment, you were still going to be slapped with this sort of qualifying hurdle. But everybody got over it. That was the benchmark, and you qualified as if you were paying sort of yesterday's rates of 5.5%, 6%. So the sticker shock sucked. for anybody who had to renew, because they're looking at $500-600 more a month
Sure.
in mortgage payments for the next 3 to 5 years, 2 to 5 years, whatever term that they took. But at the same time, but they could all qualify for it. So I think that it's good that we're always right and the headlines are pretty much always wrong. And now they're finally catching up to us here. And
Yeah, they're getting it now. They got to watch the show.
want our flowers, we've been saying it. We've been telling people to relax. Not that $500 a month in extra payment is going to make you relax, but you're not going to lose your house. So
no, and many people make more money than they did 5 years ago when they signed this low interest rate as well. So the kind of the absorption of being able to pay that higher amount, and people have had this in their mind that my interest rate's going to go up, the mortgage payment's going to be higher, I better start planning for that. That's been in the media. So that's the good thing about interest rates being higher, is that people have had to be more on top of their payments. I loved in the a question in the article that TD is crediting diligent Canadians with helping the country back away from the credit cliff. Just made me think of our brave Canadian homeowners borrowing less and saving more. But then we were talking last week about consumer debt being hitting a record high. So which one is it? Are we the brave Canadian savers, or are we like spending all of our savings on debt?
Or now we just feel okay about it, Canadians. And we looked at that, and it's like Canadians
From
have had
last
the
week?
highest household debt since forever. And I remember when we were at that conference, and Dr. Sherry Cooper was talking about that, about how Canadians have always had more bigger mortgages, more consumer debt, and we just seem to trudge on. So if you put all that into perspective, I just don't know how you can publish these sensational headlines that make everybody worry. And we also know that Canadians are like the least likely to default on a mortgage out of any of the sort of G7 countries. So we're in good shape. We've always been in good shape. It's just when the interest payments are so high, it stinks, right?
Yeah, and I think like TD was also looking at like the aggregate balance of Canadian mortgages outstanding by mid 2024 had decreased by 1.2%, or will decrease by 1.2% in 2025. So that's part of it. But I think that people have just been purchasing less homes, right? Like the real estate market has decreased a lot. So people are taking on less debt. Going forward, like we're not adding as much debt, but that doesn't really account for the debt that people took on during the pandemic, these big mortgages at low interest rates. So I have trouble reaching the conclusion that individual Canadians are in a better place, that they've kind of weathered that storm and been able to carry their debt better, they've saved more, or is it just that people aren't taking on as much debt as a group of Canadians?
Well, I mean, just focusing on the renewal aspect of it alone, it's like we knew that it was going to be okay, as long as you didn't come across some unfortunate event like loss of a job or something like that, which is going to stress you out in a whole nother level.
Sure.
But all things being equal, we were already prepared for renewals 5 years ago.
Yeah, and the stress test, everything else, for sure.
Now, you shared an article about some CIBC predictions.
Yeah.
Well, I mean, specifically, what I found interesting there was what was it, like Timmins, Ontario, or something, and parts of Alberta are going to see record years. But across the board, the prediction is 5% home price increases.
Yeah, I think I think so. Across Canada, it's always going to be very neighborhood and region centric, right? Will Quebec City see the same increase as Timmins, Ontario? Probably not, right? Will our condo prices increase 5% in downtown Toronto? I doubt that's gonna happen.
What's
but I
the
can also
benchmark? Is
see
it 9%? Do they estimate it at 9% growth year over year, or is that too? Am I
It's been
on
about
a
7% over the
7?
last 40 years as
So
the just something
5%
just under 7.
would be still soft.
Still soft compared to the average.
Hmm.
But we've had years where it's been like 10, 15%. So
It
if we're
definitely if you know, talking about flattening a curve.
yeah,
Certainly the last couple of years. I mean, it's nice to be able to project out some growth after the last couple of years of being pretty flat, if not down, depending
yeah,
on the property type.
yeah, and I mean it's Remax, predicting 5% home price pop because of the interest rate cuts and the changes to the mortgage stress test. So so two things, our interest rates going down, the variable rates going down, the fixed rates have already come down, but also these mortgage changes are going to make it easier for a lot more people to get into an average home, specifically because we're GTA focused here in the GTA, being able to purchase up to 1.5% using 30-year amortization, using less than a 20% down payment for first-time home buyers. So that's a big incentive for people to get in the market, and it opens the door to essentially being able to take on more debt and then to increase the price. And I think that's what we're going to see on our detached or semi-detached and our townhomes here in Toronto.
I think you're right. I think that, you know, anything in that sort of price range of 900 to 1.2 million, that really like that sweet spot for the first time home buyer, that we'll see a price increase there. We have to, because when there's more money available, um, people are going to eventually have to reach for it when the sort of feeding frenzy starts up again.
Yeah. Yeah. So I think it opens the door for, a couple, say they're a teacher and a police officer, to own an average home in the GTA with less than 20% down without having essentially generational wealth. You think if you're going to buy a property at 1.5 million, the 20% down of that is $300,000. Even for two people making roughly $100,000 a year, that takes a decade to save. Like that takes a long time to be able to do that without help from family.
For sure, and
uh
especially if you're having to pay for rent. I mean, if you can live at home and save money, you're going to be in, you know, you're going to be able to accelerate that savings. But
for
if
sure.
you're the cost of living, where's it going to come from, right? So
Yeah.
it's going to provide relief, but it's also going to provide a little bit of motivation to ask a little bit more for your you know, on your selling price.
Yeah, and that's where the prices will go up. I think 5% is conservative considering the changes. And I always talk about fear of missing out. I think that start churning this spring, and we'll start seeing a lot more buyers get back into the market. We have a lot of people on the sidelines.
And I've been in the accelerator frame of mind that, you know, that things are going to skyrocket after this year, after everything that we've all the analysis that we've done. I think I'm a little bit more conservative about my 2025 predictions than I was probably 6 months ago. Maybe the headlines are getting
Come
to me.
on, Vaughn, let it rip, buddy.
I wanted to rip. I'm ready. I'm ready. My shoelaces are tied up super tight. I can run so fast right now, but
I'm
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 not
the
sure that.
conservative one. I'm supposed to be given the like, I don't think it's going to change this much, and you're like, oh no, 2% Bank of Canada rate decrease.
Oh, my prediction of the where we wind up with the Bank of Canada is still the same.
Okay.
So we still have a way to go there, and I guess that's what I'm looking at. Like, oh, how long at 25%, or sorry, 25 basis point rate cuts? That's gonna take a long time to get down to that 2% Bank of Canada overnight rate.
Yeah, because well, I don't. First of all, I don't think that all of a sudden we're in any hurry to do that. Just with all the unknowns, specifically the U.S. economy, the new administration,
Oh my goodness, yeah! What a week that we
what's going to
had
happen?
in
Yeah,
Canadian news, and our prime minister flying down to Mar-a-Lago to have a conversation with President-elect. Did you
save
see
the
the
day, man.
jokes about like, oh, maybe Canada can
No.
become the 51st state? Apparently, President Trump joked with Trudeau, Prime Minister Trudeau, about that.
Oh,
Um,
really? Yeah.
yeah. Oh boy.
I mean, I take it that in jest. I think that's funny. I think he's feeling pretty good about himself. He's the new president. You got Trudeau flying down. He's probably feeling great about
He
himself.
probably
You
is.
know,
He's like, oh, I got the Canadian guy in my pocket now.
you know what? We've got a great opportunity to benefit from. Somebody framed this to me this weekend when I was away at my son's hockey tournament. So like we have an opportunity to actually benefit from this administration and to make Canada stronger because of that. And some of it is just pandering to what he wants, right? Like if we're able to be his, number one ally, increasing NATO spending, strengthening up the border, I think these are two things we should have been doing already. That's going to make us look good if we can figure out how to get the minerals that we have, the resources we have down to the US and make them stronger. What that makes us stronger as a country,
For sure. I mean,
digging out our lithium.
I've never been fearful about the new U.S. administration. I know that it can get pretty sensational in the media, but I mean, if you're going to fly down and hang out with President Trump, he's probably going to put you in his favor, and I think it's sort of required, just the style of leadership, if you want to call it, that he has. I think he does a lot for his friends, and if you can be that, then you can do a lot for Canada. We'll see. I don't know how long Prime Minister Trudeau will be our prime minister, but you never know.
You never know, and if he can, you never know for sure. It seems like we're done. Canadians need a change, but if he can demonstrate that he's the only one for the job to be, managing that relationship, then maybe that gives him a leg up. What I like about Trump being president from a Canadian perspective is that we rally around our own. We stop internally fighting. There's enough of that, and that will continue, but it becomes Team Canada. What can we do? The premiers all of a sudden start meeting and like, what can we do as Canadians? Let's put our stripes aside and let's decide what's the best thing that we can do as Canadians to make everyone in Canada stronger.
I mean, that's a wonderful thought, especially we've had sort of since 2016 and the first Trump presidency, it seemed to have caused a lot of division, a lot of left and right kind of conversations that we've not really been susceptible to up here. And hopefully that this will rally for Canada, because we're a great country. We got great people, and squabbling over left and right stuff seems to be not a great use of our time and resources.
Yeah. I think a lot of us are in the middle, leaning slightly left, leaning slightly right, and it's the flavor of whatever centrist view that we have. I think in the end,
that's what we've historically been. I think that with our current administration and our current opposition, it's still pretty messy. It would be great to have a grown-up step into either one of those roles and put us back to, make Canada great again. Just like make it boring again, like make politics boring again. Let's center right, center left, I think is where we need to be. I think everybody thinks that that's where we need to be. We don't need this extreme sort of conservative liberal jargon. We don't need it.
I would agree with that. I think it's just messy.
So, sorry, your last article was Remax. This one was a CIBC poll, and this was that 50% of homeowners have done or plan to do a renovation on their property. Maybe meaning that people are sort of looking to the future and not, trading housing like they would trade stocks on the stock market. So, is buy and hold the new reality?
I wasn't aware it was ever not the old reality.
Well, I mean, the frothy market conditions certainly stretched the reality of the buy and hold.
Right.
Now, all the professionals we work with, our head brokers are like, buy and hold is the way to trade real estate. You hold on to
Yeah.
it. But because of the market conditions, it wasn't the reality. The same as like for us as mortgage brokers, we've always said financing condition, right? You put in a financing condition to protect yourself. The reality of the market for the last 7, 8 years has been, if you want to get the property, you're going to have to build a contingency plan, because a financing condition isn't going to get you the property, right?
Yeah.
So even though that was always our advice, that's always the fundamentals. It seems like maybe now the market is getting everybody back to the fundamentals, and I think that will strengthen the future of the economy.
Yeah. To take it in maybe a different point of view than just buy and hold. The financing condition, I always tell people, like, it's there to protect you. If you can hold on to it, great, but you may need to be at the point where you're making a decision whether or not you want to buy this property and take that risk, because it is really the buyer that's taking all of the risk in that scenario. And so people are just in a great place to be able to do that. They've sold a property and they've got a big down payment. They're not maxing out on their purchase price.
Mm-hmm.
And by speaking to a mortgage broker that's got a variety of different solutions, will you be able to purchase the property if push comes to shove? If something happens, what's the worst case scenario?
Yep.
And I've just being able to advise people like that, here's your maximum purchase price. You're maxing out everything. Maybe now is not the time to waive the financing condition for this property.
I mean, I've certainly
Be
had situations where maybe there's a little like bruise on the credit, little something that a lender is not going to love. And I've said to the real estate agent that's searching for a property, is like, you have to find something that's been sitting on the market. We cannot go in on this property without a financing condition. If they want to get into the market, that's the only way that I'm standing by this deal. But for the most part, on the other side, well qualified, not purchasing at their max limit. You've basically underwritten the file yourself. You've collected all the documents. You've gone through everything, and you're like, well, yeah. Ultimately, you have to take a risk, and you can get them to sign a document that says that they're prepared to take that risk, and it's a sensible decision at the end of the day.
For sure. I think as the market gets frothier, that degree of risk increases. That you have to max out, you have to get into the neighborhood, the school zone, the type of property that your family needs. You're probably taking on that risk as a borrower. But there's some people they're comfortable with doing that. There's other people that may give up a few things in order to be there. But how can you negotiate? Maybe you can match a closing date that another seller who's able to offer more money is, or maybe you're offering the same, but you have a financing condition, but your closing date, you're able to accommodate whatever closing date that they want. So it's not always just like, well, I've got a financing condition and that's that. Maybe you have a financing condition, but something else about it is good.
More favorable. Yeah.
Yeah.
Or
I've
higher
called listing
deposit or something.
agents. I've called listing agents on behalf of my clients as well, saying, like, on behalf of the borrower's real estate agent as well. I've said, like, hey, I'm calling and they're well qualified and we've looked at this, and this. Obviously can't give them any specifics on it, but just being able to put our best foot forward and say, like, hey, we're ready to go. Financing looks good, but we just want to
waiting to get the commitment. Yeah. And so what would you put on that? Like, what's the tightest? Like a 2-day financing condition, 3-day financing condition? You don't need, like, in the past it would be like 2 weeks. They're like,
no.
I would like
I would do 5
in the 90s in the past.
Yeah, I always say 5 days financing condition. If you're doing 3, everything's got to go pretty smoothly in that scenario. It's going to take us, might take us a day to get everything together to send into the lender. The lender, depending on how busy they are, they might have 2-3 days turnaround time. So, 3 days is pretty tight. 5 days, 5 days is a good amount of time. And I just don't see how, I guess 3 days, if you drop the deal and they go back on, they can get their property back on the market that weekend. Like
Right.
if they're negotiating Tuesday, Friday, you hear that the deal's not going through, they're back on the market right away. They don't miss that crucial window. But for me, 5 days is where it's at. Otherwise, 3 days is
Just
okay.
don't
Otherwise,
do it
don't
on the
bother.
Canada Day long weekend.
Yeah. Oh, the
Busiest
Canada Day
funding
long
weekend
weekend,
of the,
nobody's
of
open
the year.
anyway. Yeah. Nobody's open anyway, right? Like, so if they say, oh, it's the, we've got a 3-day financing condition, it's Friday, the Canada Day long weekend, and Monday's off, I've got until Wednesday at that. I've got until Thursday at that point, because it starts the day after
You
they
get
sign
the
the deal.
you get the extra day. Obviously it's counted in business days, but that being the busiest funding sort of week of the year, all
Yeah.
the spring deals seem to always close right around the Canada Day long weekend. And a lot of lenders won't even pick up the application. They're like, "Yeah, we need
No.
5 days to. We can't even look at it. We're funding right now." So
Too busy. I'm too busy.
So that's a good one for all the real estate agents out there, is don't close on the Canada Day long weekend. Not a quick close anyway. If
No.
you're going to close there, get that deal, done
It's always
in
like
April.
June 25th is like I always have that date in my mind. June 25th is the last Friday, not the week before the Canada Day long weekend is always the busiest closing day of the year.
Yeah. Yeah. So word to the wise there.
Word to the wise.
And so, Sean, I know you wanted to talk a little bit about fixed rates. I've never been following U.S. bond yields up until up until this year. This is what happens when the market gets a little bit slow. We have to go out there and try to get all the information in front of us so we can help people, sort of predict or project what's going to happen next. Fixed rates have been kind of up. They've been up and down. But the main perception is when Bank of Canada reduces the key interest rate, everything goes down. Not necessarily the case.
Yeah, that's false. Yeah, they're not as tightly correlated as what a lot of people would believe. Fixed, even though we're expecting a quarter or a half interest rate cut next week, 3 out of, what is it, 5 or 6, 3 big banks, let's say this, increased their fixed rates this week. Some of the bond yields went up last week by as much as like 0.35%. So that's essentially the banks. What I always say is, like, the banks increase their rates. They take the elevator. When they're decreasing, they take the stairs. So any sort of hint that interest rates might be high for a bit, they're jacking up. They don't want to miss out on that profit. Essentially, that's just profit margin, right? The higher the bond yields are, the less profitable it is if you're going to keep your interest rates low. So I think that we're in a spot where fixed rates or those bond yields will need to come, and they have come down since last week, and the interest rates still went up.
Yeah, they have, and some of the monoline lenders have started decreasing their fixed rates as early as like yesterday. So
Yeah,
it is a little cat and mouse going on right now, and with the uncertainty of the next U.S. administration, there seems to be a bit of volatility there in the U.S. bond market right now.
yeah. I mean, nobody really knows what's going to happen with inflation. Currently, it's 75% chance of a 25 basis points cut for the U.S. Federal Reserve at their next meeting.
Right. So that's on December 18th.
So that's nothing's a sure bet for that, and they're not expecting a supersized rate cut. So inflationary pressures are still real. Consumers spent $13 billion on Cyber Monday this
Oh my
week.
goodness.
So it doesn't seem like anybody's, trying to save money at this point, and that's inflationary. We
Yeah.
spent almost, I heard the projection, and don't quote me, it was $1 billion in Canada on Cyber Monday.
Holy smokes.
I mean, I did
I wouldn't have
90% of
bet
my
on
shopping
that.
for the year, basically, on Cyber
Yeah,
Monday.
for
Like,
sure.
I've been waiting for this, right? And so I get in there. So I can't see the spending. Consumer spending is something that they look at. Geopolitical events is something that affect it. GDP, which I know we're going to talk about. That's something that affects it. It's so many variables. It's not just the Bank of Canada decreasing the interest rate.
Right. There are a lot of variables. And I mean, one of them, the growth for Q3 just came out. It was a pretty abysmal 1% growth. So that kind of paves the way to, or a good lead in for the conversation about where we think rates are going to be for next week. I'm still feeling 50 basis points, Bank of Canada rate cut, hoping for 50. We can get this.
It's a hope strategy at this point.
It is really. It's too many things to because we don't have our November inflation numbers yet either. So that will probably come in this week, if not like early next week, right before the rate announcement.
This week, tomorrow, Thursday, we're getting U.S. job claims, and Friday we're getting the Canada and U.S. employment reports, which are both two big factors when it comes to what the Bank of Canada is going to do.
Yeah, for sure. So are you on the 50 train, or are you the 25 train, or do you have something outside of those realm?
I still think we're 25. I don't think that the market is screaming for 50 like it was 6 weeks ago in the October meeting. I think that we need to be a little bit more cautious with the monetary policy, unless job numbers are U.S. job numbers in particular are down a lot, and then the Canadian numbers are down. I can see that those being factors that may increase it, but I just think that the U.S. economy is chugging along too strong right now, and for us to get even further ahead of them, I don't think that does anybody any favors.
My prediction will be based on the inflation numbers. If inflation comes in and it's 2% or less, 50 basis points. If it crept up over 2%, 25. So
what were we last time?
2. Like I think we were yeah. So it went from like 1.6 or something, or 1.8 to 2%. So it crept up in October. If it stays flat or decreases for November, that tells me green light. All your money's on 50 basis points. Even if we go to 2.1, I might be more hesitant and agree with you on the 25.
Yeah, we'll see. I think I think 25. I would lock in 25 personally. I mean, there's no chance of 0 at this point. I think it's 25, maybe 50. But you're right. We got a lot of numbers to evaluate before next Wednesday, and which we will be going live at our next Bank of Canada meeting.
Go live. We'll push that one out there live.
The fans love it.
It's nothing but positive response from the marketplace. They're like, Sean, Vaughan, give us more live.
They want to see it.
They do. And speaking of want to see it, I wanted to talk about your annual toy drive that you do, because it's a great thing. It's for the kids. Tell people how they can contribute, and tell them about the program.
Yeah, I'll put a link in below, but I essentially just put together an Amazon wish list, and it's for kids' toys that we can donate to the Salvation Army. And so every year I do it. I try to gather as many toys as possible for kids that are in need and donate them. I always wanted to do something, but I always forget. I don't know what to do. I don't know where to take the toys. I don't ever go to the mall. So I wanted to digitize it for everybody, where they could just click a couple buttons, feel good about themselves because they've bought a toy for somebody in need. And I'm going to make sure it gets donated to the Salvation Army.
That's fantastic.
Thanks, buddy. Yeah, it'll be good.
Awesome. Well, let's get together next week and do this all over again. We'll announce the Bank of Canada rate cut live. You'll be on the edge of your seats, and we'll be navigating you through those channels. So that's it for me. Sean, it's great to see you. We'll do this next week.
Thanks a lot, Vaughan.